Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, July 6th, 2020, and we're here at about 5:20 in the afternoon right now. Well, you know, a strong up day on a Monday often, the word is not always, often leads to a pullback on a Tuesday. Go and look up Yale Hirsch's book called The Stock Trader's Almanac. You learn about those probabilities. There's no guarantee, but if you go in and you're looking for rules of thumb, those are some of the rules of thumb that have stood up fairly well. The word is fairly well against the test of time. Everything has its time and place, and you're looking for reasons for those to occur. Now, when we go away for the 4th of July like we did this past Friday, you do understand Europe is open and Asia is open. Therefore, when we come in on Sunday through Monday morning, as the markets are reopening in the electronic sessions, we are often playing catch up with them. And what made these markets move last night was that China was so strong. And you saw the market going up to levels it hasn't seen in quite a while, be it Shanghai, Hong Kong. You're just watching their indices take off to the upside. And I did say Hong Kong. You wouldn't think the Hong Kong stocks are up. They are. Take a look at the indices. So we had a nice bounce today, and why not? There's no bad news right now. We know we have the COVID cases. They're not good. We're still hitting new numbers, and people aren't worried about it. People are worried about return on money. Better returns. How do they make up for near, what, a 0.69 interest rate on a 10-year note? What do you do with that? On the energy market, they're hoping the economy's strong enough to make the prices go up. Saudi Arabia has raised prices to Europe, America as well. So those are going to kick in August, about $1, $1.20 a barrel. Grains were a bit stronger today as there's hope that China will kick up its purchases because they're really far behind on the energy sector. I don't see how they can make up what they'd have to buy in order to meet the goals that they set. Remember, we didn't hold them. You got to buy this, you got to buy that. We held them to a dollar number. I don't see them making it. And of course, the metals, a strong day. So let's take a look. If we take a look at a weekly area chart of closes, we're up so far for the week 40 points. And if we were to close, and this is a close only chart, so we don't know, you'd be over that last high. I don't know that we're going to do that or not. It's early. It's Monday. This is a close-only chart. We have to see where we're at by Wednesday and Thursday. But you get an idea that that's a fighting area. When I take a look at the bar chart of the Sept S&P, the thing that stands out to me is you're still very much caught between that high and that low. And I've been saying this for weeks on end, that you're stuck in that range, and you are. Are we trending? No. You're still caught with a lower low, higher high, and unlike the NASDAQ, you haven't gone through new highs, or frankly, for new lows. NASDAQ hasn't done that either, obviously. Where's the market? Well, now we've got about our 4th day in a row where we're trying to stay over the 18-day average of closes, which is the red line, which means the bias is up, and on pullbacks, that would be the support if the market were to break. Where would the resistance be? I'd say it's the upper Bollinger Band, especially the first challenge of it. You did not hit it today. You missed it. If you hit it tomorrow, and that number's around 3181.5, that's where I'm looking for the resistance. I'm looking for support back here. And I think you're stuck in that Bollinger Band for the time being. In terms of momentum, overbought. So I have a market that's knocking on the door of serious resistance. You only stay above a Bollinger Band or under one 5% of the time. I'm looking for a market that could pull back to that line in the sand, as I call it, that neutral number of the 18-day average while it's overbought. The NASDAQ is a market that keeps charging ahead. This gets everybody's attention, be it Amazon, closed at what, 3,000? You're looking at Tesla taking off. I mean, I can go on and on. Is Tesla an auto company, a tech company? You argue that out. But he sold red shorts today, and that was clever. I mean, you got to give him kudos. He's funny. And what Mr. Musk said was, in plain English, I have a good friend that's friends with his brother, by the way, but what he said, you laugh, the red shorts, I mean, funny. Why? big short position in the market that he just keeps annihilating, or his company does. NASDAQ just keeps running to the upside. This is the one index you don't want to be short. Until there's a reason to be short, forget it. If you're going to play the short side, you play the weaker ones, not the strong ones. In the Dow, you got up today to 26,197. Now, the last rally high in this market was right here at 26,294. If you take a look at the market, are the pros selling it? No. You're over the 18-day average, so you don't add new short sales. For them to get short this market, you can't take out that high, and you need to close back under the 18-day average. Right now, everybody's sort of neutralized, but the trend is down with the bias up, and you're approaching now overbought territory with the 72 stochastic reading. In the Russell, no trend. You got a lower low, higher high, serious resistance at the combination of the 200-day average in gray, 1472.70, let's call it, and the Bollinger Band at 1467.30. You made a run for him today, didn't quite get there, but as I said, you're not trending. In the VIX, I am expecting the pros, if the market is down tomorrow, to write puts at the 2513 level, looking to get back to the 18-day average near 29.26. That number will change a little bit, but not dramatically over the next few days. In the bond market, you're still in an uptrend. So you still have the higher lows, higher high, and all the market's done for the past 3 to 4 days is pull back into that 18-day average zone and sit there as it's working off an overbought condition. What else? It had been embedded. Remember, when both numbers are sideways over 80, and you were. When you lost it, right back here, you're looking for prices to get back to the 18-day average of closes. So there it is. I'm looking for the 18-day average. You hit it, and you just sort of married it right there. We'll have to wait and see what's next. T-bonds are the similar thing, identical. And a very narrow, now sideways action in Bollinger Bands. Volatility's coming out of this market fast and heavy. We're back into this type of action, putting it together again. I don't recall seeing that happen ever. That's a strong statement, ever. So that's teaching me something new. In the dollar index, I'm bearish, and it hit its downside target. I expect to see aggressive selling on rallies in this market. The problem for me, and I will repeat it, you're going into that tube. And when you're in that tube, if you're looking for follow-through, God bless you. I'd like to see it. I'm bearish. I'd like to see it drop, but I'm fearful of that tube. The opposite's happening in the euro. It's not trending. It's got a lower low, higher high. I don't look for it to be able to get much beyond the upper Bollinger Band, and I'm still in the, fundamentally, I'm in the bull camp. Technically, I'm neutral on this market. Japanese yen, I think we're going to do this again. This sideways action is developing one more time. So it's summer, and maybe this is what we have to expect, loss of volatility in these markets. Bitcoin came out of its downtrend in the Sept. You have a lower low now, a higher high. It's oversold, correcting, sideways action. I don't see anything there. Differential between Brent and WTI crude favoring the Brent, as you can see. Market keeps gaining on that. We're still in an uptrend in the Brent, very overbought. I see a lot of resistance at 44.05, support back at 41.45, trend up, bias up. WTI, by the way, and too overbought. I don't think you're going to attract here the bulls in the market at this point. You're going to have to do something else to get them going. From a pure technical point of view, I don't think they'd step into an overbought condition. Same in the slow stochastics on WTI, so I'm looking for resistance at 41.75. Remember, tomorrow at 3:30 we get the API numbers. They've been pretty good with the EIA recently, and we had our first reasonable draws, which is friendly. We've got a lower low, higher high situation here in the rebob. Nat Gas had a good boost today. It didn't hurt to see Warren Buffett, what did he buy, Dominion today? And for $10 billion, wow. So, everybody thought he wasn't doing anything. I guess he decided to step in. He had sold his airline stocks and bought the energies. Interesting. So he sees something for down the road, a value play most likely. Resistance, the 205 area. Want to remind you that Going along with all this, I put out Spider ETF subscriber videos. So this ties in, as you know, to UNG for the nat gas, DIA, SPY, you know, you got them all, QQQ for the Dow, the NASDAQ, and so on. If you'd like to find out more about that, go to our website under the word research, read about it. If you want to sign up, it's right there. No contract, no commitment. I'm Ira Epstein. You have a great day. I will talk to you all tomorrow.